Okay guys, I'm going to go back to JPY. I've just come back from the pub, so this mightn't go well because I've had a few drinkies today, and I always feel the need to help you lot. God only knows why, but I do. So let's have a little look at this. I will be doing a little video announcement on Saturday regards how the squad is going to go forward for the new tax year, because it is only going to be 2 levels with the one bolted on the side, and I'll explain all of that on Saturday. But in the meantime, let's have a look at this. If you're wanting to go into market, first of all, you've got to have your levels. It's bust through the daily ATR and it's busting through with gusto. Now if you go onto your basket of pounds, every single one of them is up. So what's the chances of the train slowing down? Not much. That's why you look at the baskets. Now you could do the conspiracy theory and say the budget yesterday was good and the markets are reacting positively, but you could also look at it that the markets are pushing it up to slam it down. There's always 2 sides to the narrative. So the only narrative I take is what's directly in front of me. I don't give a toss what the news has to say, and when people talk to me about it, I just completely switch off. And the reason being is, if I'm not in that room, I have got no idea what the thinking is behind the markets. None. Zero. So therefore, I have to make my own choice, and the only information I've got is what's in front of me. So if I flick on red light, green light, so have a little look at that. The first thing I'll do is look at this, okay? So there we are there, they're both green. All right, I'm not trading that, I just want to see it as a bias. Right, I'm going to take this out. I'm going to do a full mark from the month, just so you can see it all if you haven't seen it prior. Okay, so the last close was negative. What does that mean? It means last month the sellers were in control. The general direction was down and you're in the range, so momentum could go either way, and the Bolly's pretty neutral, so the strength is stagnant. Take it down into a week, pull this across. Whoops, sorry, maybe it's a bit too far. Pull this across, there we are. And last week the buyers were in control. Now that'll explain the stagnation on the monthly. General direction is up, you are still in range, and the Bolly's still pretty neutral, so there's a conflict of interest. Take it down into the daily for best of 3. Well, what have we got? Well, yesterday the sellers were still about. Today the buyers have a general direction. You're still in the range, and it is flaring to the upper side now. So it's a bull market, okay? So all that means is, if you're going with the longs, you've got the money in your favor. Now we need to look for general directions. Well, in the last 4 hours, clearly it's been buying. General directions buying. It's still in range at this moment in time, but your Bolly is up. So there is a definite shift to the upside. Take it to the hour. Pull this across. Right. The hour is definitely up as a general direction. It's actually down for momentum, but the Bolly is up. And because you've got 3 indicators, they balance each other out. That's the reason behind them. Take it down into 15 minutes so we can see what the situation's all about. Okay. So again, general direction is positive. There is a little bit of relaxation going on. Momentum, but the Bolly is still positive. And then take it down into 5 minutes just so you can see the absolute now. Just like so. Pull it in. What have we got? Well, there's a little bit of a change in the horizon here. What it's showing is it's still positive general direction, but it's definitely down, and it's still positive here. But right, you've now got to read into this somewhat, because it is collapsing, so that'll pull back down on itself. But essentially it is a buy across the board. Your status is weight, so you look at a 15-minute chart. The grade is A. The trade itself is a buy, and you have red light, green light. Okay, they are all in play. Flick that over. What have you got? There you go. All right, so it's come back, and you're looking at a 17 pip target over the course of the next hour. All right, very, very simple process. Okay, so what do I do now? Do I need these indicators? No, because I've worked out that I'm going to buy the thing, and I've also worked out that I have to sort of follow a 15-minute chart. So I'm going to take the indicators off. Don't need them. Now I'm going to look at the structure of the market. What have we got? Well, if I come down on the hourly, just so that I can get a real good look at it. All right. Up, down, and then pushing through. Has this locked in? Tracement. Well, started off that candle, got up as high as there. Yes, it's locked in. So what do I need now? Now what I need is the extension points. Okay, so where will this extend to? Well, just put that there, and we'll turn it round. It's going to push to here. Okay, very, very simple process. Work that out, just like so, just like so. What do the rest of them do? Well, what these do, these now give me some areas of attraction, which is here. I can look for some extra areas of attraction using the 15-minute chart. Now you can, if you wish, if you're an indicator trader, start looking for trigger points. Well, what I'd look for in this case is that to come around here and then come back up again. But I would do that on this particular chart here. So I would look for that to get under there and then come back round. Okay, but the pressure's all in the trade. So this is a nice area, this is a nice area. You can put on a Fibonacci here, which is what we're going to do, which is here. I could easily look for the retracement on a Kylie, but what I'm going to do is I'm going to do it backwards. All right, that's the lowest point of that move. That's the highest point where it is. That 23 is lined up perfectly with that. Happy days. So now what I can do, I can use this lot. Now, dead simple way of trading. Okay, 15-minute. So I want to start the orders on here. Bish bash bosh, as they say. So flick that over there, get myself a little order. Just drop it up there. We want 17 pips as per the sheet. Bishy bashy bosh bosh. Okay, so 17 pips is there. Up to that is 25, but if I step it back slightly to about 20, that will give me enough room to get in. So what I'm trying to do now is I want it as close on that line as I can get it. So I'm on my first trigger line. All I have to do now is just let this thing play out. Right, okay, once that's done, right, it's into market. Once that's done that, I need to figure out where it is that I could possibly be wrong. Well, we can see there's a major swing there, and there's this, so I'm going to use that as my last point of entry. My last point of entry is going to be here, and down here is going to be where I'm wrong. Simple stuff, guys, simple stuff. So extension, point of entry, last point of entry, there. Don't need these blue marks anymore, so I'm going to get rid of them. Just get rid of them. Naughty, naughty marks. Get rid of them. Get rid of that. Naughty. And then we just drop a couple of orders in. Bish bash bosh, bish bash bosh. Bishy bishy bish bosh 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 bosh. Bing. Oh, have I put that in? Oh, I have. Move that down onto 25. Put that up onto there. Bishy bashy bosh bosh. Bishy bashy bosh 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 bosh. Bish bash bosh bosh bosh. By the way, boys and girls, don't really trade when you're pissed. It doesn't work very well. Oh no, that's going up the wrong way. Shit. Do it this way. Right. Bish bash bosh. Bish bosh. Bish bosh bosh bosh. Hey, Winky. Are you awake? I don't know, but do you want some loving? You want some loving? I'll be no then. Right. Big box of pain is here. And then I'll adjust that to figure out where the stop area is. So put that on there. And we're going to have that very dark box of pain. Right. 50% up to target. I think we'll fuck off and all. Alright, so it's 50% up to target. Pull that down to there. Okay, last point of entry is there. That's where the stop is going to be. So just move my box of pain up there. Now I've got a criteria for my stop. I know exactly where the stop is going to be based on a 1-to-1 on position 3. Now this might answer a lot of questions on madness. And most of you get madness completely wrong. Completely wrong. You cry because only one entry gets put into the market. So what? Doesn't matter. See, this is essentially 5 trades in one trade. And each element has its own job. If that first fiver runs for 20 pips, well, I get paid 20 pips off a fiver. If I get 2 and 3 in, well, I get paid a lot more. And that is just the market giving me what it's wanting to give. Now, if later in the day I've made some losses and I choose to go back to market and offset those losses, that's what 4 and 5 are. I just do it as a single trade rather than multiple trades, what most of you do. Now, if you want to go in 100%, fine, knock yourself out. But I'll guarantee you'll not make any money. You will not make any money. Because what you'll do is you'll have a couple of good wins, you'll sink to the hilltops. I'm doing amazing. I only need one position. Oh, I've lost my account. But I'll have had another go. Because not only have I got 5 entries to go into the market, I've also put half of what you did going into market, so I lose a lot less, which means I can trade a lot more. I hope that makes sense. It's a very difficult concept, and I'm going to go through it fully when I'm not sort of pissed, and I'll explain it. But what you've got to remember is it's a complement to a trade idea. You do not have to go full percent in the market, and if all your profits are being wiped out by one set of madness, your stops are way too wide and you haven't managed the trade. Now, I manage it from this point, the third one, so I'm only really losing a very limited amount. And if I do, fine, but I have a good win rate. That win rate gets me through quite well, and I also look to try and run trades as well, and that's what the third one is. Because if I can hold that up to here, that particular trade, well, that's worth 326. This one's worth 215. This one's worth 100. But if I stop after I've made 100 quid, I sure as hell don't expect to lose 500 quid straight away. I'll look to make another 100 quid and another 100 quid and another 100 quid. And it all adds up. And it all comes back down to the first rule of trading. Do your bloody homework. If you're just switching the computer on and using it like a casino, don't ever talk to me, because you're a fucking idiot and you're losing money. And why? Because you're not listening to a word I tell you. Nothing. Levels are king. Work from level to level. And if you're unhappy with the stop, don't take the trade. Period. If you're happy with the trade, space it out and capitalize on the fact the market moves against you. And that's it. So let's play this one to the end, and then we'll call it a day. I'm having tomorrow off completely, so this will be the last one of the day. So guys, job's done. Targeted pretty much correctly. Stopped in and around this area, just stepped it back from the level. Just make certain I've got everything out, because drinking and trading isn't the right way to go forward. But then again, it is. Oh dear me, I'm not rightly sure how much I can make this simpler. I really don't. I'm gonna have to put the brightness up on this, see if I can flick that over. Whee, there we go. Oh, right, I'm gonna go back down into the bar. Why? Well, because I might want another wee drinky, and I'm going to have a bit of fun with Winky. Had a bit of fun with a we go into the bar, and fuck it. How you lot can't do this is beyond me. It's not difficult, guys. Get your levels in, pick your direction, then just look for a logical entry and a solid target. That's it. This is not difficult. If you're looking for holy grails, looking for X marks the spot, oh look, that's shiny, oh look, that one's doing well, I'm going to follow what they're doing. Doesn't matter. It only matters what you do. You can't replicate somebody else, because you're not somebody else. The only thing you can replicate is put your levels into place and follow what you see. That's it. Anyway, we'll discuss it more when I'm back next week. But every time you go to market, just think, what's the market trying to achieve? What am I looking at? And what direction is the biggest driver? In other words, is it pushing up or is it pushing down? If it's pushing up, go with up. Don't try and counter trend it. You know, not until you're very experienced. Anyway, catch you soon, guys.